Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is June 26th, a Monday, first day of a new week and the last week in the month of June. Quickly turning the calendar on another month here. Going to head into July shortly. Today we are going to cover Pfizer. It is a biopharmaceutical company out of the healthcare sector. Let's jump right in and take a look at it. So if you want to know more about this company, check them out at www.pfizer.com. That's www.pfizer.com. Again, they are a biopharmaceutical company. Been around since 1868. Pfizer buys and renovates a post-revolutionary era building at 81 Maiden Lane in Manhattan and moves its headquarters there. The expansion propelled by the Civil War continues and Pfizer's revenues double. The company now has substantially increased the product line and 150 new employees. To accommodate this growth, it buys and renovates a post-revolutionary era building at 81 Madden Lane. We read that above. And that expansion has continued on into 2022. Pfizer acquired several companies: Arena Pharmaceutical Companies, Reviral, Biohaven Pharmaceutical Company Holding, and Global Blood Therapeutics. So again, biopharmaceutical company out of the healthcare sector. You may be aware of this one with all the CV-19 stuff that was going on recently, right? They were one of the ones that produced the vaccines there. You know, everyone lining up whether you're for or against the jab. This is the company that made those vaccines. So not getting into politics here, but this is a biopharmaceutical company. That is what they are involved in, not just stuff like that, but anything like that around the healthcare sector. A lot of us are getting older, and as we get older, we tend to need drugs to help us prolong our lives. I'm on some pills for high cholesterol, so just happens as you get older. That's just one of the things. I don't think it's going anywhere. As we have an aging population, this is one of the places I see value. And whenever they pull back, like Pfizer did, we're going to take a look at them. So again, not getting into politics. Let's keep this one about the business and let's continue on. But they have been around for over 150 years. So I believe if we do have any downturn, which I believe we've kind of been in a downturn for a couple of years now, that this one will make it out the other side, especially with these recent additions, acquisitions that they've made. They're buying up some of the smaller competition out there, which gives them a bigger pipeline. And that's one of the things you want to pay attention to with biopharmaceutical companies, pharmaceutical companies in general, not just the drugs that they have today, but what is in the pipeline coming up that they can sell as well. You want to keep those pumping out so you have a continual stream of revenue. So again, check them out, www.pfizer.com, if you are interested in knowing more about the company. And the reason we are taking a look at them today, down 3.68% on the day. Big drop. For me, that's nice to see. Full disclosure, I am long Pfizer. I own some shares of this. We'll see that in a little bit. We are talking about Pfizer Inc, ticker PFE, out of the healthcare sector. Closed the day out at $36.89. 52-week range as low as $36.16, as high as $54.93. So they are definitely closer to that 52-week low than they are the 52-week high, and that's where I like them, right? Closer to their low, that gives us a pretty good buy-in at this price. Now, if they were to set a new all-time 52-week low, obviously you can get them cheaper, but average volume 24.7. Today's volume 55.9, and it looks like pretty well a sell-off over throughout the day. Market cap of $208.255 billion, so they are a large cap company here. Beta of 0.59. They are less volatile than the overall market. Price to earnings PE ratio is $7.28 there, so very low on their PE ratio, price to earnings there. Earnings per share, $5.07, so that's very nice. That's a pretty good earnings per share there. Earnings date coming up August 1st, so look for that if you are interested. You'll see how they're doing for the year. Forward dividend is $1.64. They are a quarterly payer. We'll see that here in a little bit, what they pay out per share per quarter. Very nice dividend yield on this one, 4.28%. Ex-dividend date, July 27th. So that is actually tomorrow. You would have had to, oh, I'm sorry. No, we're in June still. July's coming up. So you got about a month on this one to be able to buy it up and be able to hit before that ex-dividend date. For ex-dividend dates, you want to buy before this date. So you are if you are interested in this company, you want to buy them on July 26th. That would put you in line for the next payout, and they will pay out September 5th there. 1-year target, at least according to Yahoo Finance, $46.80. So that speaks to some potential upside appreciation. Again, according to Yahoo Finance, I'm not affiliated with Yahoo Finance, just one of the sources that I like to look at. And you can see here, we're going to jump over, if you were to jump into statistics here, go down to the bottom, dividend and splits, we're going to look at dividend yield theory. For this one, 5-year average 3.62, so you compare their 5-year average to their current 4.28, or what they call forward over here, 4.28, same number. And if it is higher, which it is, this speaks to some potential undervaluation. Again, according to dividend yield theory, this one is potentially undervalued. Same things we saw before. Payout ratio 31.76, very low payout ratio on this one. Very nice to see there. And if you were to jump over into financials, one of the things we want to look at is free cash flow. You want growing dividends over time, and to get that, you need growing free cash flow over time. And free cash flow can be used for acquisitions like we saw on the previous slide, where they're buying up other companies, paying out dividends, which is what we want. That's why we want it growing, paying down debt, that sort of thing. Buying back shares is another one that can happen. So on this one, 2019, $9.9 billion to 2020, $11.6 billion. From 2020 to 2021, big jump up here. This would be part of that CV-19, the COVID issues that we had, from 11 to 29.869 billion. And then a slight drop from 2021 to 2022. This was expected as kind of people got the shots there, and that waned a little bit. This was an expected drop, but a drop nonetheless. So you would want to watch this and see if this continues the trend into 2023, from 29 to 26 billion here. But overall, from 2019 to 2022, there is positive free cash flow growth there. So that's what we want to see. Now, I always recommend more than one source so you can back check the information you are getting is accurate. Another one that I like is stockanalysis.com. And the 13 stock analysts that have taken a look at this, they call it a consensus hold here. I actually do not agree with this. This is one that I've been looking forward to pullbacks. I've recently added it over the last couple months, and I'm going to continue to add it at these prices right up against its 52-week low. And they have a low estimate of $38, and that would be, it's currently lower than that. So if it came back up to their low estimate, that would be a 3.01% increase. If it hit their high, this is pretty close to what we saw on the previous slide for Yahoo Finance. $48.46, their average here, that would be a 31.36% increase in the stock price. And if it happened to hit their high of $75 estimate, that would be a 103.31% estimate all the way, or increase, all the while you would be collecting that plus 4% dividend yield if you were to buy them now. Now, you get a lot of the same information from stockanalysis.com. Financials, you can go down there and see the same balance sheet, income statement, free cash flow. If you go into statistics, same thing. You'll see that's where I pull the return on equity and return on invested capital. Forecast is what we're looking at here. And we are going to jump over and look at return on equity, ROE, and return on invested capital. I like 10% or better for both of these numbers, or in line with their industry average. And this one smashes both. Return on equity sitting at 30.90%. Very nice. 3 times what I look for. And return on invested capital sitting at 31%. So they are doing a very good job, Pfizer is, of reinvesting their capital and spending their funds efficiently. So very good to see here. Very, very nice numbers all the way around. Even return on assets 14.80%. So very nice. Let's jump over to dividends. Take a look there. So as we saw, 32.28% payout ratio, dividend growth 2.52. It's not the fastest, but they are growing, so that's very nice to see. And with a 4% plus dividend yield, I can live with a 2.52% dividend growth. They recently raised their dividend from 40 cents in November 2022 to 41 cents January 26. So again, not huge raises, but 2.52%. And as I said, I am long Pfizer. I own 161.399 shares. My cost per share is $38.72. I have $6,248.92 into it, currently down 4.72%, and my overall position worth $5,954. But I don't mind. I'm going to continue to add this. I'll probably run it to at least 200 shares, maybe slightly over, and back off. But until then, if it's in the red, I'm going to be adding. This is actually one that I'm probably going to look to add this week if it continues to be below my cost basis. Very nice to see those numbers. I don't mind the red. I know I've mentioned it before, but when I see red, it, in my mind, presents a buying opportunity where I can lower my cost basis, I can increase my dividend yield, and increase my potential future returns. So this one to me is a buy. I'm going to continue to buy it. Probably run it up to about 200 shares and then maybe back off and look at some other positions, but that is my plan on this one. Let me know what you think down in the comment section below. Is Pfizer in your portfolio? Is it one you're watching? Is it one you're looking to add? This is a vested interest stock screener here. This is how I look at a business to see if I am even interested in investing in it. You can go ahead and pause this and run through it at your leisure. And that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a like-minded group of dividend growth investors so we can share our experiences, share stocks like this, stocks we're buying, stocks that are in our portfolio, what all is going on with us. Go ahead and share all that information down below. Let me know, like I said, is Pfizer in your portfolio? Are there other stocks in the healthcare sector that you like better? Let me know that as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.